Well, let's discuss stocks then. We've run into the list. We've told you what's the news piece. Let's get into some further fundamental analysis. Siddhartha Khemka, Head Retail Research at Motilal Oswal Financial Services, joins us. Hi, Sid. Good morning and hope you're having a good Friday morning. Well, plenty of results overnight. Let's start off with a big one. Bajaj Finance. Your view on the stock?
Yeah, good morning, Nigel. Good to be on your show, and especially in a market which is trending higher and near all-time high. So in this environment, we have seen Bajaj Finance, while the headline numbers are broadly in line with our expectations, what has happened is that the outlook is not that strong. So a PAT growth of 21% to 38.2 billion was in line. And for the full year, if you look at Bajaj Finance, the PAT has grown by 26%. But what is happening is two, three things. The AUM mix is changing gradually to more, you can say, the mortgage, commercial and SMEs, which will be low-yielding products for them. And that is putting pressure on the NIMs going forward. Credit costs also continues to remain high. And on back of the slower growth that we are seeing, we have downgraded the stock from a buy to a neutral. While we continue to admire Bajaj Finance for being the strongest NBFC with very strong execution, what we believe is that the near-term headwinds on the AUM because of the company cutting down on the rural B2C segment, plus the RBI's ban on the e-commerce and Insta EMI card will have AUM growth impact on the B2B segment. So we are estimating a NIM compression of 35 basis points compared to our earlier expectation of 20 basis points in FY25 due to the rise in cost of borrowings, difficulty in passing on the interest rate hike, and the change in product mix. So overall, the only near-term trigger that we see could be that whenever RBI revokes the ban on e-com and Insta EMI cards, we could see some upside. Barring that, we do not see any catalyst as the stock is already trading at 4 times FY26 on a price to book value basis.
Okay, got it. Siddharth, hi, good morning. There's so many IT companies that have come out with numbers, right? There's Tech Mahindra, Emphasis, Zensar, Cyient. Anything that stood out for you as, exceptional, anywhere you would sort of put fresh money to work?
Yeah, Sonia. So I think more or less broadly, we have not seen a good set of numbers so far from the IT pack. Mostly they have kind of downgraded the outlook in terms of the guidance. And so I would say that among the few that we have seen so far, HCL Tech results will come tomorrow. TCS is something that still stands out for me. Given their diversified client base, the large deal size that they have, and we believe that TCS, given its size, would be most preferred to play out in the current macro headwinds that the IT sector is clearly seeing. So apart from that, I don't see any other stock that clearly stands out in the current environment.
Got it. Siddharth, hi, morning. Talk to us a little bit about the big damage from yesterday, which is Kotak Bank. Do you think people will try and, fish around current levels? Does it make sense, first of all? What's the view?
Yeah, hi, Prashant. Good morning. So I think Kotak, they have been struggling for a while now, and we have seen RBI being very aggressive in terms of the KYC norms, and we have seen a whole host of companies getting under pressure, including the likes of Bajaj Finance. Earlier, HDFC Bank had the similar issue. And the core of it continues to remain the IT issue, which I think is not been able to resolve. Again, Kotak is something that we have been having a neutral rating for a long time now. And I would say that until this issue is resolved, the new CEO would have a lot of things on its plate to choose right now. So if you look at the results, Axis clearly came out with very strong numbers. ICICI will come out tomorrow, and SBI. So these are the three banks that we believe are the better ways to play the banking space rather than chasing something like a Kotak, which is expensive. Growth is lower. valuations are high, and to put on top of it, you have this ban from RBI on onboarding on the digital side.
Siddharth, I want to ask you about my cement companies. Yesterday you had a number that looked quite good from ACC. But if you look, dwell further into it, you'll see yet again it's a case where the top line is beating because of higher volumes. We saw it with Dalmia as well. ACC, now we'll have to find out how much of that was because of the agreement they have with Ambuja as well as with Sangye. So there is that point with regard to the volume beat, how much of that is because of the agreement. But how would you approach cement companies? Because it appears everyone wants market share, they want to push through their volumes and they want to guard their turf. That in turn will put pressure on pricing. Your take?
Yeah, hi. So basically, if you look at the overall cement companies, what has happened is the results so far clearly indicate that there is a pricing pressure. While on the volume side, it has been pretty strong, both ACC as well as Dalmia Bharat numbers, so that the volumes have been strong, but pricing has been soft. And what the management commentary, especially for Dalmia Bharat, has indicated that the Q1 numbers are even softer, 2 to 3% lower than the Q4 numbers, and they are unlikely to take any price hikes until the monsoon. So post monsoon only is something that we could see a kind of a price hike. And generally, we have seen that at least in the near term, cement companies, the stock prices moves in line with what the realizations move in. So the long-term view continues to remain positive given the strong demand as well as the volume growth. So the larger players would definitely benefit from the volume growth. While these prices continue to remain soft, margins have been pretty good on back of lower cost, and hence the EBITDA per ton has been pretty strong. So net, I would say that the near term, there could be under pressure because of the softer cement prices, but that would be a good opportunity. What we like is Ultratech Cement, which is the largest company in the cement space.
Oh. Right. Also, we have many numbers coming today. There's HCL Tech. There's, of course, Maruti. We spoke about that. But anything in the numbers to watch that you would, you would keep an eye out on, and something that you're sort of looking to build onto?
Yeah, Sonia. So I think ICICI Bank results tomorrow would be something which would be very interesting, especially after the Axis Bank numbers, and even IndusInd Bank numbers have been pretty strong. So that is something which will really kind of build up the entire expectations for the banking space. While we've seen a good recovery in Axis Bank, ICICI would be a steady, stable business where they have consistently shown strong growth and profitability over the past few years. And for this quarter also, we are expecting a good number from ICICI Bank. If you look at in terms of the loan book growth, that is expected to remain healthy on back of retail and SME segment. While there would be some compression on NIMs and credit costs would moderate, but overall we are expecting a loan book growth of about 17-18%. Deposits would be pretty strong at 17%, and a resultant net profit should grow at 16.5%.
Do you have coverage on Spark, Siddharth?
No, Prashant, we don't cover Spark as of now.
Okay. Siddharth, what do you make of Vedanta? A tricky one. You don't know what Mr. Agarwal will do next, but for the time being, he's got a lot of tailwinds working for him.
Yeah, I think, Nigel, the numbers have been pretty good, and the tailwinds from the commodity prices, that is helping a lot. And the good part is that the pressure on cash flows, that is easing. You see, the maturity of the bonds at the holdco has been extended by 3 years, and that definitely offers some liquidity comfort in the near term. Also, the deleveraging from the parent company, that is also positive. The key issue, as you said, is what will happen in going ahead. We have seen a lot of corporate announcements, up and downs, and we have this huge unlocking, or you can say demerger into 6 entities. So these are definitely things to watch out for. while we remain positive on the core business and the stock has seen some run up in the recent past, we currently have a neutral rating, mainly on back of valuations, which we feel are like of to our expectation looks full as of now.